Hey there, good afternoon, traders. Good afternoon. This is Raul Rivera speaking, and today is Friday, August 18th, 2017. And what a day we had in the markets, especially in crude oil. I'm still trying to figure that one out, but pretty somewhat exciting day in volatility, but not an exciting day for my P&L today. Taking another loss. Second one in a row, doesn't feel good, but at least, we're moving into the weekend. I could at least just try to recoup my thoughts and I'm pretty much just come Monday refreshed and, looking to trade the market a little bit differently. Today, I tried going for the big risk again and, I got hit with crude oil. I mean, that one, anybody who was short got destroyed. Okay. The idea was solid, but it was news related. And unfortunately, I took the biggest hit out of my all of my trading in crude oil today. So let's get started here with some of the profiles. So taking a look at the S&P 500, and this, sometimes you can't help but get mad, but then again, you just I don't even know how to deal with this right now myself. But looking at the S&P 500, um, we weren't really looking to get long. Okay, and the reason is when we take a look at a when we take a look. Hang on, let me see something. Yeah, everything's good. Okay, when we take a look at the profile on a 14-day period here in the S&P 500, and we're looking for areas of value for support, and we take a look back, there's really nothing. There is no support in this market in the short term. And using, if I go back further in time, I'm sure I'll find something, some kind of level of support. But what was support over a month ago is necessarily not going to be support today. I mean, the market's changed, the catalysts change, and thus, levels of support and resistance are best when we look at them in the short term in the market's most recent memory. So taking a look at the S&P, we weren't really looking for the short side, for the long side, we were looking for the short side. Um, hang on, let's split this here. There we go. So taking a look at the S&P, we had a D-shaped distribution bright and early this morning. Let me split this again. As you can see, this was the distribution just after the open. We get a better color for contrast. Okay, right here, D-shaped distribution, and also on an inside day, right? I mean, the market did trade early this morning inside the range of yesterday's bloodbath. Now, the reason I didn't play the inside day strategy on this name today was pretty simple. I have a pretty bad hangover from this huge move to the downside. And usually after we have a big push lower like this on multiple range extensions, what we'll do is consolidate, maybe continue consolidate, and then trade lower, which is pretty much a combination of a few days. You come up with a B-shaped distribution, right? So here's the move lower, and here's the consolidation, right, on today. So yesterday was the move lower, today's the consolidation. You have a B-shaped distribution, which is a selling pattern. And if you continue to distribute sideways, it's just going to keep adding and adding. And eventually we're going to have to break in one direction or the other, with the short side being the favorable one because we did move to the downside. And possibly it's a continuation of the trade, or, as always, dip buyers come in and, reverse that, possibility. But here in the S&P, we're only looking for the short side rather than the long side. When we split distributions apart, I'm going to go ahead and split yesterday, okay, into its multiple distributions. We had a B followed by a B followed by a B, pretty much B shapes everywhere. And when we take a look and we find value, after a few splits here, we were looking to short 24.40 to 42 now. Some people thought, Raul, I don't think the market's going to rally. I mean, it'll probably go up to 30, but I don't think it'll go up all the way to 40. Well, I mean, not to sound like I'm proving people wrong, but we were just right within close proximity. Okay, I still left my trades here just so that I could show. I was looking to get short 10 contracts all together, 3 at 40, 2 at 41, and then 5 at 43. When it was all said and done, we made the absolute high on the day, 2 ticks just above. Okay, 2 ticks just above. A fill in this area and a possible exit down here could have definitely recovered a lot of my losses, not all of it. So this, it's a real bummer. You know, it is what it is, but you can't help but getting mad sometimes. I mean, the market will do that to me every now and again, but I also don't want to take that into account when I'm trading, right? If I'm like, okay, well, my orders are way too accurate, maybe I got to make them less accurate. That's no way to approach it, because if I'm getting short down here and then the market trends on me, I'm possibly going to be losing a lot more than if I were to enter at a better price. So it's always a dilemma. And sticking to your rules and being consistent with how you trade is important as a trader now. Unfortunately today, like I said, crude oil just squeezed me out. And I guess the name of the game this week was like, let's squeeze the crap out of Raul. Because I take it personally. An entire week, I struggled for profits in the first 3 days of the week, and then in the last two, it's like kaboom, punch in the face. But that's all right. I mean, I'll take it, and you know, definitely got humbled this week in trading. Pretty much, I mean, probably my worst week. It is my worst week of 2017, and definitely one of my worst weeks since before I started trading futures. Because how I got started trading futures, I pretty much started with stocks and options, and I was losing a lot more money than 15,000 like I did yesterday. So today another losing day, but look at this move in crude oil. Can anybody explain to me, and give me your thoughts on, comment on the video and let me know what the heck happened here with crude oil. I mean, what is this? So I have two theories. The first one is, okay, so we're going to be rolling over into October come next week. So maybe there's short covering in September and then buying or rolling over onto October. That's theory number one. And then theory number two, one of our members told me that, hey Raul, I think the reason it's going higher is because Steve Bannon is out of the White House, and Steve Bannon apparently was bad for oil. I mean, I can't confirm any of that. But what the heck, man? This was quite the rally. I mean, look, D period was right here. This is 10 to 10:30. Okay, 10 to 10:30. And from D period all the way 46.80 to over 48.80. That's 2 points from the bottom of the day to the top. That's extreme, to say the least. Extreme, to say the least. And, we should have had a big move to the upside. I mean, on Wednesday, we had such a great report. So why didn't prices move higher? Instead, they moved lower. I was confused about that. But anyways, here in crude oil, I went with the value trade, looking to short 75 to 85, 75 to 85. Okay, 75 to 85, and I got killed. Okay, they definitely squeezed me out of this trade faster than I could. Faster than anything, really. So, looking to short 47.75 to 85. We got to that level, and then on the next bar, it was just an insane push to the upside. I got out of this trade for a 30 tick loss on 5 contracts, which really comes out to about $1,500 loss in this one. That's where most of my losses came in. So this was an anomaly. I mean, I certainly thought this was going to be a great trade, because usually when we get these big pushes, especially the ones to the upside, they're usually not sustainable. We usually just rally them, leave a large tail at the high, and then trade lower, right? That's usually what we get. But in this instance, I mean, something was seriously driving prices higher. So I want to hear what your thoughts are on what the heck happened here with crude oil. Crazy, 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 crazy. Um, 20 lots and greater also getting long off the lows here. They may have known something, slash definitely were buying on the way up. Uh, Quite a remarkable move here in crude oil. We haven't seen something like this to the upside in a long time. So nice going there, but I guess not for me since I took a loss on that trade. Next up, my biggest trade of the day here. Um, in gold. So gold, encouraging me to get long. Early this morning, we had a P-shaped distribution. Take it from here to here. There we go. And so early this morning, we had a D followed by a P on a range extension. We could see letter O was the range extension there, single prints with distribution below and above value. Okay. So the trend trade was the trade of choice on this one, or try to get long at the lows of the day. So the trend day, something I learned about myself today is probably, Raul, hold off on the trend day trade because it's not working out at the moment. Try it again later. So here we had a P-shaped distribution, so you can see prices move higher and consolidated. So the idea is that they're going to continue to move to the upside, right? If something is trending in one direction, it's more than likely going to continue to trend for the rest of the day, especially after a big move like this one in the overnight session. So this happened at the European Open. Tons of buying in gold as soon as the markets opened in Europe, and as you can see, traders may have done all right, but the idea is to buy on the pullback, right? Buy the dip, right? BTFD. So the dip to be buying is called VWAP and TWAP, right? These two moving averages always have they always have a respectable move, or they're always there's always a reaction at these levels, especially when we're trending. So when we take a look here, market pulled back. I got long at VWAP there, just one contract, because I know that the trend trade is a 60-40 proposition, which means 60% of the time I win, 40% of the time I lose. So in order to be part of the trade, I get in early at VWAP, and I know that it's a 60-40. So I don't over leverage. I only get one contract. If I make money, no one's going to complain about a few $100. And if I lose money, then it's not really going to hurt me on the bottom line. So big P-shaped distribution here. I got long at 12.95, and then I tried it again at the time moving average here at 96.90, and then that's when the market started rallying. That's when the S&P started moving off the lows, and gold just took a dip here. So I had orders between 92, and as low as 89.5. 92 and as low as 89.5. I got filled on all of them. So in total, I was long 8 contracts at 1292.70. Okay. At its best, this trade brought about 2 points. At its best, and then after 1:30 p.m., the market just died. I mean, so gold opens at 8:20 a.m. in the morning and closes at 1:30 p.m. That doesn't mean that all trading activity halts or stops. It means that the settlement period for gold is over, right? The open market for gold, or the pit, is closed. There is trading afterwards called post-settlement trading, and it's almost like an aftermarket. And usually in gold's aftermarket, volume really dies down and price action really doesn't do anything. As we can see here, it built a little bit of a wedge and then just dumped lower. I was able to recognize that wedge, and I said, you know what, we're moving lower. Okay, we have distribution to the right. More than likely, this is gonna probably continue to move lower. So I did take off my position, all 8 contracts. As you can see here, 5, 2, and then 1 at 12.92.70, which was a break even on this trade. So I started. So this is when buying as markets go down can help you, but it's really risky to do this kind of stuff. And I certainly don't recommend anybody try to do this unless you can afford to. But I started at all the way up here around 99.50 and moved my cost average as low as 92.70 and able to break even on the trade and not really lose anything on this other than commissions. So a bummer, B shape is for bummer, right? And as you can see this on the profile view, right, we have a D followed by a P followed by a B, and that's what happened here in gold. Looking at the 30-year, looking to buy 55.11 to '07. The market never really made it lower, and the market did trade higher as gold was also at the highs during the 9 a.m. hour, and it wasn't until the market opened, it went from there. So didn't really do anything much here in the 30-year. Moving over to the other two indices, and the Nasdaq and the Dow. Looking at the Nasdaq. Again, this time we were really actually looking to short around, these are old levels. These are yesterday's levels, but they happen to play in today. We were looking to short 58.61 to 70, but of course the market didn't make it that high. This level from yesterday that we were trying to buy was okay to sell today, and you can see prices did move into that, and it also happened to be the high of the day. So this one could have been a fill on a short. And remember, when we take a look at the S&P down here, we were trying to short right there, which also happened to be relatively close to the highs of the day. So the strategy is still solid. Okay, the strategy is still solid. The only thing I have to do personally to improve my trading is adapt to this high volatility, because it's been a long time since we've had volatility between 14 and 16. Close to a year. So, getting conditioned to that type of environment, and then, getting thrown into the lines then with high volatility, it's thrown me off a loop. My other theory is that this week was Fed week, and, statistically, I don't perform all that well on Fed week, but obviously, the performance this week was well beyond, any of the losses I usually take on Fed week, but at the end of the day, all I can do is look forward and not backwards. The last trade I want to show here that I took was in the yen, and this one again, was the trend day strategy, which I'm probably going to hold off on going forward. Next week, I'm just going to focus on the value trades, and here in the yen, we had the exact same pattern pretty much as gold. D-shaped distribution followed by a P-shaped distribution, and then from the highs we pretty much sold off lower. So here we can even see splitting that last distribution. Oh, hang on, wait, I gotta do this. Right bottom, there we go. Here we can see D followed by a P, and then another P. So markets trending higher, and then suddenly they move lower. With gold, it seems like profit taking was coming in, and also the S&P 500 was buying. And a lot of these markets, they do not agree with the S&P 500. If the S&P moves higher, a lot of these markets will move lower, and if the S&P moves lower, a lot of these markets move higher. So realizing early this morning we had a trend in our hands, we were looking to take the trend trade. We switch over to hybrid again. And the trend trade, much like we did in gold, was to get long at VWAP if you have a range extension, which I did, and or get long at TWAP. I held off the VWAP trade and I took it at TWAP. Worked out for about 20 ticks at its best, and then just started dropping here. And I'm like, you know what? It's happening again. The market's going against me. I'm just going to take this trade off. So I'm not usually a big currency trader, See, I held the gold trade because I know the gold market a little better. But the currency trade, this, these trades are like another world to me, and especially with all these decimal places, I don't know, what's what. All I know is buy low, sell high. So we tried that, good for 20 ticks, but then it reversed, and so I took off this trade for minus $400 loser on just two contracts. So it did move against me quite a bit. I believe it was about 28 to 30 ticks. Again, I mean, with all these decimal places, it's so hard to tell, how many ticks you really took off and how much it really comes out to. But it was a $400 loser here in the yen. Um, there were some good opportunities in the yen this week that I missed out on. And this one, I tried not to. Um, but, like I said, the market worked and then it didn't. Sometimes that happens. Seems like it happened to me a little bit too much this week, though. But anyways, if you guys click like on the video, please do so if you like this video. And also leave your comments in the comment box. Any questions you guys may have on the market profile or how I trade and exactly what it is I do. And I will answer those as soon as possible. And also, definitely leave your comment on what you think drove this rally in crude oil, right? It's pretty crazy. From 46 at the very low, 46.78, and at the very high, 48.73. That's ridiculous. That is an insane move. 78 to 74, almost just a couple of ticks, just 4 ticks from the high there. So if you guys like the video, go ahead and click like. And if you guys have any questions, comments, concerns, go ahead and post those in the comment section below. If you guys want to know more, visit the website www.themarketprofile.com and claim your 14-day free trial to the live trading room, where you'll see me trade all these markets live, real time, as well as manage them. And we also do some market profile education when things are a little bit slow. Thank you guys for watching. Hope you guys all have a great weekend, and I'll be back refreshed and ready to go on Monday. Thanks, guys.